Hey now, I'm going to show you and review a trading system that has been proven profitable over a series of 100 consecutive trades, and all you have to do is click that subscribe button right now. A viewer asked me to review the system from No Nonsense Forex called Flip It that uses the Williams %R in an unconventional way. First indicator is obviously the Williams %R, which is a TradingView built-in indicator. We are going to keep this oscillator at default settings. The typical use of the Williams %R is to identify overbought and oversold places in the market, but we are going to use this as a trend continuation and confirmation signal. So we are basically going to be using this indicator in the exact opposite way it was designed to work. The second indicator is the exponential moving average set to the 200 period and colored in white. This study will provide us with the overall trend direction. The third indicator is the Ichimoku cloud set to default input settings. We are only going to use the Kijun-sen, which on TradingView is listed as the baseline. We'll remove all other elements. The final indicator is the ATR bands set to 2 times the ATR. We are going to use this to set our stop loss levels. Let's go over some examples. This chart is Euro versus the US dollar 1 hour candles. The rules to enter along on the Williams %R Flip It system are: price must be above the 200 EMA. Second, price moves under, then comes above the Kijun-sen line. Third, the candle that closes above the Kijun-sen line must be accompanied by the Williams %R being in the overbought territory. All of that happens on this candle here. This is our trigger candle. We place our stop at 2 times the ATR, which is this lower ATR band here, and target 2 to 1. And this one hits 2 to 1. We have one more long example. Price is above the 200 EMA. Price comes below and then closes above the Kijun-sen line. The bar that closes above the Kijun-sen also shows overbought on the Williams %R indicator. This is our trigger. We target 2 to 1, and this one hits 2 to 1. Now we flip to shorts. This is what I will test for shorts. First, price to be below the 200 EMA. Second, price closes above and then closes below the Kijun-sen. Third, the Williams %R is in the oversold territory on the candle that closes below the Kijun-sen. We target 2 to 1, and this one hits 2 to 1. I'm going to show you one more short example. We have price below the 200 EMA. We have a close above and then a close below the Kijun-sen, and the Williams oscillator is in the oversold territory. The stop is placed at the upper ATR band and we target 2 to 1. And this one hits 2 to 1. I'm going to show you some optimization ideas at the end of the video, and now it's time to do what I do. Remember, this is just 100 tests on one instrument. If you're thinking of using this system, please do all the required testing and be sure to let our community know what you discover. Now let's review the test data and go over a couple of ideas on how to optimize this system. This test was done on Euro versus the US dollar 1 hour candles. It took just over 1 year to find the 100 signals. We had a 47% winning ratio, the most wins in a row being 6, and the most losses in a row almost double that. Gain on the account would have been 41%, risking 1% per trade. The one word I would use to describe this equity curve is problematic. Looking at this, you can see there is an extended period of consolidation followed by an impulsive move up, and I'm going to explain why in a moment. I give this system a trader's landing score of 4. While using an indicator backwards can be effective, this thing just doesn't filter out enough bad trades or get you into enough good trends. Remember, the enemy of great is good. So how do we find the crumbs and make this system better? As I have shown in other videos, the Kijun-sen can be a very effective indicator, but it may work better in conjunction with another indicator like the super trend, which are reviewed in this system here. You can see on this chart all of these pullbacks in a strong trend that this system does not let you participate in. This is why the equity curve is less than ideal, because it gets you into a choppy market but not on a trending one as often. It is solely the risk reward that gets you profitable at the end. This is the biggest edge with this system in my opinion. Check out this playlist for more profitable systems and have a great day if you want to.